So hello there, welcome to the Real Estate Market in a Minute report for October 2024. I'm Steve Enchin, your Los Angeles, Beach Cities, and South Bay real estate expert. Now, please remember to look at the video description section, which contains my contact information, so you can reach out with any questions about the local market, along with links to subscribe and receive your own online or PDF copy of this comprehensive market report each week. It's 6 pages that goes through a lot of details that you need to know. So our real-time market profile, our proprietary market action index that shows where we are in the market relative to a buyer or seller advantage, breakdown of our market segments. We have long-term charts for list price broken out by segments. We have our price per square foot. We have our inventory, and we have our trends in the market action index. So there's a lot of great information in these reports. So it's definitely something that you want to consider subscribing for. But this is our review for this month in October. So I'm going to dig right into it using our real-time market profile. So this October, the Manhattan Beach real estate market is marked by some substantial adjustments and trends. And that's going to reveal both some resilience in an evolving buyer-seller dynamic. We were not in a fantastic place last August, if you remember my market research report back then. I think things are getting a little bit better now. So while the market's maintaining still a slight seller's edge, we have some significant increases in median list price and inventory, and that's hinting at some changing dynamics, both with opportunities and challenges, really depending on whether you're a buyer or seller. So first, looking at our median list price, we have a good increase, $4,175,000 up from $3,997,499 back in August. And that's a pretty strong rise that underscores a lot of seller confidence, as well as possibly some shifts in where the listings are occurring. Because remember, we have all these different neighborhoods in Manhattan Beach. Many are at different price points. So as more listings emerge from different neighborhoods, that could also help shift that median list price number a little bit either way. But this increase really suggests that demand remains robust in Manhattan Beach, as it virtually always is, and sellers are really being optimistic about achieving these higher prices. They may be influenced by the area's appeal and high property values, but buyers need to really be prepared for these higher price points, especially as inventory climbs. They get more choices, more options, and that could potentially provide some negotiating opportunities if the market continues to balance out. Now, price per square foot, that has decreased from $1,570 in August down to $1,393 this month, and that's a pretty significant drop. It indicates some changing buyer priorities, and the shift suggests that while overall list prices are rising, again, potentially because of some shifting in where those listings are occurring neighborhood-wise, buyers are also focused on getting more space for their money, and they may be shifting their interest towards larger properties or those that offer higher value for their dollar. So for sellers, this trend is going to emphasize the need for competitive pricing on a per square foot basis, as well as highlighting your property features and the upgrades that you've done, views, etc., that could justify a higher cost. So, inventory trends. This is a big change here, significant increase. We had 35 in August, we're now 57 in October. So buyers are going to have more options that could start influencing price sensitivity as the supply continues to expand, if it does. And for sellers, this increased competition is going to potentially require more strategic pricing and targeted marketing efforts to really stand out. The more listings there are, the more choices and options there are for buyers. So you really have to be aware of what your competition is before you set the price on your home. And this increase in inventory is really going to be a big thing for us to watch, because if we have continued growth in supply, it could start shifting leverage from sellers to buyers, especially as we get into the typically slower holiday season over the next few months. Moving on to days on market, that has decreased quite a bit. We were at 35 days in October as a median number, and that's way down from August. We were at 138. So this acceleration in sales pace is really suggesting that homes are moving much faster, likely due to competitive pricing in some of the market segments and a busy buyer pool that is trying to capitalize on the new supply of available homes. So sellers need to note that although homes are selling faster, the increase in inventory implies, again, timely, well-priced listings will continue to attract the most attention. And buyers need to be aware that desirable, well-priced homes may not stay in the market for long. So prompt action could be necessary for you to secure a property, especially if it's a property that you see and you really like it. You gotta move fast. Now, market action index. This is our proprietary number that tells us where we are. We a seller's market, a buyer's market, or balanced, and that's up a little bit. Good sign, from 39 to 41, and that reinforces the seller's advantage in spite of the rising inventory. But again, we got to watch that over the next couple months. Does inventory continue to rise? Do list prices and sale prices stagnate? And then what does that do to our market action index? So for now, the slight increase is going to reflect steady buyer demand, which has kept pace with the influx of new listings. But if inventory continues to grow, we could start leveling out in the market action index, maybe decrease, potentially giving buyers more room to negotiate. So for now, sellers may still hold the leverage, but pricing strategically, I keep repeating this over and over again, pricing strategically will be essential as the market potentially starts to shift. We always want to try to price ahead of future changes, not price behind and get caught. So let me scroll down here to the market segments. So breaking down the market by price segments, the luxury quarter, which is the top 25%, continues to experience longer days on market compared to the mid-range and lower price properties. And that suggests that buyers are becoming more discerning at the higher price points. Homes in the lower price segments are certainly turning over much faster. That's to be expected. Remember, Manhattan Beach has a lot of demand, but people are trying to look for something in the city that they can afford. So luxury sellers, you may need to adapt more competitive pricing or enhance your marketing to attract those higher end buyers. And mid-tier and lower price properties continue to remain attractive for really faster sales. So summary, October's really brought us a mix of growth and recalibration here in our real estate market. Big increases in median list price, substantial rise in inventory, faster pace in days on market. So these dynamics are shifting, although the market still favors sellers. And buyers are going to find more options, potential leverage as the inventory grows. So we have to see how these numbers really sort out over the next few months, if they do continue to change. So hope this information has been helpful. If you do have questions, remember, contact information is right up on the screen, as well as the video description. Please reach out with your questions, with your comments, and thank you for watching. We will see you on the next video.